So you have done a very nice thing. So as I just told you that a sole trader and partnership, these are unincorporated bodies. And so actually the exposure to debts and liabilities actually extend to the owner, right? But for companies which are incorporated, companies are limited liability companies, these are incorporated bodies. And so the exposure to debts and liabilities are limited when you speak of the shareholders. Only the company itself is liable, right? So for number one, the company's exposure to debts and liabilities is limited. It's not limited. The company has to pay and maybe until it is, you can say it is limited until it is exhausted. Because if the company maybe owes someone $100 million, but it is only worth $60 million, those amounts will be taken and then it won't be able to pay. It's not like it's limited, but it's just that the company will have run out of capacity to accommodate such debts, right? So this exposure is for shareholders and not the company. Number two, financial statements have been produced. And number three, a company continues to exist regardless of the identity of its owners. This is very true. That's why if you're a shareholder and you decide to share or to sell shares to another, the company still exists, but the ownership changes. But for partnership, if one partner goes out and the other comes in, the original partnership is broken down and the new one is formed, right? So for this case here, number one should be excluded, and so the answer should be C, 2 and 3 only. All right.
Okay.
And now we can proceed with the next question.